coincidence, Derek, that Polos from Canada, Draghi and Carney all turned a little bit more hawkish this week? It can't be a coincidence, given that it all happened in the same place.
No, I think there certainly could be a degree of coordination going on. Certainly, from the perspective of Draghi's press conference on the 8th of June and Portugal this week, in the period in between, of course, we've had the Fed raising rates again. We've had them announcing a balance sheet shrinkage plan. We've had the Bank of England 5-3 vote and the expectations of rate hikes there. Norges Bank shifted its bias. So there was evidence between the 8th of June and when Draghi spoke that central banks were beginning to shift, and that, I'm sure, gave him comfort. And then following on from that, of course, it's likely that all the central banks are going to be a little bit less concerned about an unwarranted tightening of financial market conditions if it's becoming a global feature of central banks outside of the US.
Let's talk about the euro, because I love this chart, Derek, 4239. These are the levels. I mean, 113 was the post-Trump election level. Yeah. 114.28 was the post-Brexit point level. 117, as I said, was the 2015 high. I mean, we're at the 114.28 point now. I mean,
sure.
Talk me about those levels and how easy it's going to be to break through them, and what discomfort that might prove for Draghi.
Yeah, like there's a tough road ahead, I think, and certainly looking at that, you can see north of 115, although we've been there a few times, it's been pretty brief. So since quantitative easing and negative rates, when we had the plunge from 140 down to 105, 115 has largely been the range since that period of time. The other point I'd make is that, despite this hawkish shift, if you want to call it that, from Draghi, spreads with the US actually haven't changed. And a lot of the short-term metrics are telling us that already euro-dollar is looking overextended. So, I'm not convinced that we're on a sustained march higher from here. Like, Draghi has a tough job. The communication from him is, look, the risks of deflation have gone. We now have reflationary conditions. Therefore, the monetary stance to reflect fighting deflation is no longer justified. And I think that's, in essence, what they're going to try and do. So the message will be quantitative easing is perhaps no longer justified. If we get through all of that relatively smoothly, then I think negative rates is next to go, because that's certainly not justified either. But in terms of tightening policy, we're nowhere near that. And